The Federal Reserve just released the minutes of the meeting they had on October 29th and 30th, outlining the state of the economy. And with me today, I have Jack, who's going to help me break down this entire transcript, which it's linked below with all my highlighting and breakdown if you want to see the link down below. But in the meantime, I'm going to break down the highlights for you with Jack. So without further ado, Jack, will you get number one? And let's go to the intro, because this is the Meet Kevin Report, where I report news that makes you money. So, number one that came out of this. Do you want to hold it for me? Here you go. You just want to give it to me?
Yeah, just give it.
Oh, okay, he's just gonna give it to me. So, we know that the unemployment rate is down. Labor force participation is up, which is good. Unemployment insurance claims, people claiming for unemployment, way down, which is very, very good. But there are some red flags coming out. Jack, do you see these red flags right here? There are less jobs available or less job openings being posted. This is a possible red flag because this could lead to the unemployment rate going up. We're also seeing the pace of job gains going down. Not good. These are some red flags that could actually end up hurting the unemployment rate in the long term. This is gonna be something we have to watch out for. So this is number one, a little bit of an issue. Jack, let's get page number two. All right, number two, inflation is clocking in again at 1.7%, which is both good and bad. We really want it to be around 2%.
Keep it.
Oh, you want me to keep it? Okay. And it's hanging out around 1.7%, which if it gets too low, the Fed loses power in its ability to take control of the market and stimulate it. So that's not good. However, a lower inflation rate means there's a less chance of hyperinflation, which is good. Also, this lower inflation rate means it's more likely that the Fed might consider dropping the Fed funds rate, which might mean housing or mortgage rates will go down. So it'll be another opportunity to refinance in the future, which could also prop up home prices. All right, Jack, give me the next one. The next one we have here is pretty dang green, and the Federal Reserve actually picked up on something that I haven't noticed before. That is, the Fed says that in the third quarter of this year, real residential investment went up despite having contracted or going down for the prior 6 quarters or 18 months. This actually makes sense because if we go back to May of 2018, things were a little, starting to get a little dicey over there. That's when Kevin started making market crash videos. And now we've actually seen an inflection point. Things are on the up and up. This is really, really good. Construction permits are up, disposable income is up from people, people's wages are up, people's wealth is up. A lot of good things on the residential and consumer side. And Jack, what does it mean if you have more money? What do you get to buy more of?
Nerf guns.
Yeah, you get more Nerf guns. Number four, loans to businesses are totally available and up, but less businesses are actually taking on financing because a lot of businesses are cutting back as they see the global economy slowing down. This is almost the complete opposite of what consumers are doing, where consumers are spending more, personal spending's up, personal wealth is up, more people are taking advantage of loans, more people are refinancing, more people are taking out loans in general for their home purchases, their first home purchases, and people are really getting into real estate investing, which, by the way, if you haven't yet heard, I do have a real estate investing course where I teach you how to buy below market value real estate. Jack, do you like my online investing course?
Yeah, of course.
Thank you, Jack. So the other question that I've been getting is people have been asking, hey, are prices going to be cheaper for Black Friday? And the answer is no. In fact, the coupon code currently that expires on the 25th, the THX24 coupon code, will net you a better deal than any coupon code that would be out for Black Friday. So if you're interested in taking advantage of checking out the real estate investing course, the sales course, property management course, or the personal finance course that was just announced, you should check those out before November 25th. Use that coupon code THX24. Now back to the Fed. Jack, I have a question for you. Do you know who FedEx is? What does FedEx do? What do they bring us?
Packages.
They bring us packages. Well, the New York Times just did a special report on FedEx, who had pretty heavily lobbied Obama and Trump to cut taxes and incentivize business spending, saying they'll spend more money if taxes are lower. And guess what FedEx did, Jack? FedEx did not spend more money. In fact, after the tax reductions for FedEx, the New York Times has found that FedEx actually spent less money, which is interesting, but sort of goes along with overall just businesses investing and spending less. Instead, what they're spending money on is pretty much just buying back their own stocks. All right, thanks, Jack. Now, when we look at the foreign market, we see that obviously the European economy, the United Kingdom, these are showing significant signs of slowing, though they might also be now finally coming out of the doldrums as Germany just posted a positive GDP growth, which prevented them from remaining in a recessionary environment. This is very good news, and we want to keep an eye on any kind of turnaround because Europe is really slow right now. And the global economy, at least according to the Fed, seems to be what's slowing down the US economy and business spending. Now, when asked about negative interest rates in the United States, the Federal Reserve says, nope, we ain't doing it, which is good. But they also say we're not doing it because it probably won't work, which is a sign that the Fed is starting to run out of tools to help with the economy. That's not good, and Jack looks pretty sad about that. All right, Jack, can I have the next page, please? This is the last page. Thanks, Jack. What are we gonna do after this? Nerf guns, yeah. All right, so number 6, looking at bad signs. The biggest bad signs that people are looking at in terms of the marketplace are, well, leveraged loans. It's probably the biggest ones. These are risky companies and risky financing that could potentially be ballooning. Well, according to the Fed, there seems to be less of an appetite for these leveraged loans right now, which is good. We also see consumer debt is up, but not in terms of a percentage of folks' disposable income. People's disposable income is going up faster than their debt loads, and rates are so low that that's not really an issue either. We're also seeing that increased capital requirements are reducing the odds of any kind of major market crash, but the big concerns the Fed is worried about right now, and these are the big doomsday scenarios, is the Fed is worried that, if we have to reduce rates again because inflation is low and we have to reduce rates again, we're worried that we're running against this zero bound, this lower bound where we can't reduce rates anymore. We won't go negative, and that means we might not be able to stimulate the economy again in the event of a crash. This also explains why Fed Chairman Jerome Powell is now having more open dialogue with Trump to encourage Trump to spend money as the administration. That is, more fiscal spending, more government spending, rather than only policy changes at the Fed. Because the Fed might start realizing, we're kind of losing the ability to impact the markets here. Although I will say, when they raised rates, they impacted the market a lot in 2018. And the last fear of the Federal Reserve is, well, what happened to Japan. Japan's stock market, if you look over the last 30 years, has felt pretty dang flat. And that's the last thing the Federal Reserve wants to happen in the United States. And that's why the Fed is spending so much energy trying to understand what's going on in the marketplace, what can we do to keep stimulating, and overall, what can we do as consumers to invest our money. My bottom line right now, I'm putting all of this data together, and I think 2020 will be a pretty dang positive year for real estate. So I'm out there hunting for below market wedge deals. I'm ready to invest more money. I'm excited about investing in stocks, though I have to say, every stock that I've been wanting to invest in has recently shot up that I've also already had money in. So on one hand, I'm happy that my Tesla stock and my Target stock and my Disney stock are way up. But on the other hand, I'm a little bit sad because I like buying deals at a discount. So maybe I gotta look at Starbucks a little bit more detailed. So folks, there you have it. Check out the courses linked below. Remember, this entire highlighted transcript with all the citations is linked down below. Use that coupon code THX24. Join me in the courses. And Jack, do you wanna say anything to anybody as we say goodbye?
Bye.
I guess we can say goodbye. Follow me on Instagram, and until next time, bye.